Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Well, hello, everybody out there. Welcome to Mortgage Mom Radio. I am Debbie Marcoux, and I am the Mortgage Mom, and I am coming to you guys live every Monday or Wednesday or both right here on YouTube. It's always at 1 p.m. Pacific time. Today, I'm a little late getting off the starting track, so it's 1:30 right now. But if you don't want to miss a show, you want to be part of it, you want to know when I go live, you've got to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Texting the word MOM to 844-935-3634 will get you opted in to receive a text message no more than once per week. I promise. So even though there might be a week that I go on twice, maybe there's a week I go on a little late, I only send out one text message per week to make sure that I am not spamming you. But it does give you the opportunity to get that link, click on it right from your cell phone. It'll take you straight to YouTube and you can jump on, you can watch the show, and you can get in and be part of the action. This is an interactive show. I want you guys to ask me questions. I want to read them out loud and I want to answer them for you. The only way for you to be able to do that is to watch me do it live on YouTube, Facebook, or Twitch. So yes, I haven't talked about that in quite some time, but if YouTube's not your deal, that's okay. Maybe you like Facebook. You can actually follow our page on Facebook, and you can watch me do this live there as well. It's streaming to all 3 platforms at the same time. Twitch, we've got that going as well for all you gamers out there. If that's your place, that's where you like to spend your time. We want to be able to help you. I know some of you guys do make some good money, and I know some of you guys need to get a mortgage. So we are here to help you in any way that we can, no matter which platform it is that you like. Now, I can tell you that YouTube, you're going to see more interaction. You're going to see more people ask questions, make comments, and you're going to be part of the show a little bit more than you might be on those other 2 platforms. But we are actually streaming to all 3 live at the same time. So once again, if you'd like to watch us do this live, you want to interact, you want to ask your questions, please know that that is available. That's what we want you to do. And if you're listening by radio on Saturday or Sunday, then know that you're listening to a show that did happen a week or 2 back. So you might be just a little bit behind, but we invite you to join us, to see me do it live, watch me. And then this is actually the content that we take that we do put to radio across the nation. So once again, you're going to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That is the same exact telephone number that you will call to reach my office. We are answering the calls Monday through Friday, Saturday and Sunday. When we're not answering, if nobody is available, it will go to call service. You can book an appointment. You can go to our website, go to mortgagemomradio.com, and you guys can hit the contact us button and use all of the calculators and all the fun stuff there as well. So once again, I'm Debbie Marcoux. This is Mortgage Mom Radio, and today we're talking about Wednesday's Fed meeting. So they obviously will meet this week, and we're expecting to have an announcement on Wednesday about them increasing the interest rate on the Federal Reserve prime rate. So what exactly does that mean to you? How is that going to change things in your pocket? How is that going to change mortgage, but also what other things are going to be changed? And so that is what today's show is all about. So again, I invite you to ask me your questions and let me read those out loud and answer them for you. So the first person that jumped on was Cole, and it says, thank God I bought in September. Hey, Cole, the sooner that anybody can buy, the better. So the fact that you bought in September, if that was 2021, you made a good decision. Anybody whatsoever right now that it wanted to buy a home or has been looking to buy a home or keeps telling themselves, I'm going to buy a home, are going to be in a position of would have, could have, should have. And that is something that they're going to feel whether they buy today. They're going to feel the same way next year, just the way that you feel. Thank goodness that I did it. So this is very important. I want to make sure that everybody knows I don't believe that waiting to purchase a home is the right decision, but that is me, that is mom, that is my personal opinion. That is not anything that I have read somewhere that somebody has shown me statistics, just going off of what I've seen in the past and what I expect or anticipate to see in the future. So my dad jumps on. He says, hi, Dad. Thanks for watching. Haven't seen you on in a little while. I was starting to get worried that my favorite fan wasn't following along. Heidi jumped on. She says, hi, all. Heidi, thanks for watching and for being part of the show. Really appreciate it. And then Cole says, VA home loan 3%. And Cole, you're right. Anybody, again, that is thinking about buying a home this year and wanted to buy last year and didn't do it is feeling like could have, should have, would have. And I can tell you that anybody that buys a home next year rather than doing it this year is going to feel the exact same way. And we're going to get into the reasons of why, and we're going to actually talk today about what we're expecting. But the most important piece that is on hand right now today that everybody wants to know about is what's going to happen when they actually meet and they do their announcement for the Federal Reserve prime rate. And we're expecting that on Wednesday this week, July the 27th. So I don't want anybody to go anywhere. I want everybody to stay tuned. We're going to take a super quick break. And when we get back, I'm going to actually read an article to you that I found, and then we're going to start to talk about that article. And I want you guys to continue to ask questions. So I can see that Dad jumped back on again. Jennifer jumped on. She says, hello, all. Heather jumped on. She says, hi, everyone. So if you guys are out there, you're watching, I want you to show me that you're here. Give me a thumbs up. Say hi. Put it into the feed. I want everybody to know that this is interactive. Please feel free to put your questions in the comments, and we are going to make sure that we get to them. I will not stop the show until I answer every single question. And this is how we do it every single week. So I do want to make sure if you guys like this this conversation, all of these topics, this mortgage, this economy, the real estate, and you want to be involved, you want to be part of the show, make sure that you guys do text the word mom to 844-935-3634. That will opt you in, and you will get one text message a week. I promise again, I will not spam you. You can also subscribe to the YouTube channel, click that notification bell, turn it on all. And everybody that is watching right now, please, if you wouldn't mind, give me a thumbs up on the show. It truly does help the algorithm with the video. But with that, we're going to take a super quick break. And when we get back, I'm going to start in on this article, and we're talking about the Fed and what we expect and what's it going to do to your home purchases, your refinances, and other things like credit cards, equity lines of credit. What do we expect to see? So stay tuned. Don't go anywhere. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux, and I am the Mortgage Mom. And today we are talking about what we're expecting on Wednesday, July the 27th, with the Fed rate hikes. What are we expecting that to see? What do we think that it's going to do to mortgage interest rates? What other things might it affect? And what can we give you as far as, What should you be doing? What train should you be jumping on? We're going to get through all of that today. But first, what I wanted to do is I want to start with an article. And obviously, being in the industry, being in the business, writing mortgage loans, being a loan officer and, having a real estate background, I'm constantly getting articles sent to me. I subscribe to articles. I pay for articles to help me write my newsletters for all of you that get my newsletters on a weekly basis. And it's because I do want to give you actual data that we're getting out of the industry, from those people that are doing that background checks. They're running the numbers and they're getting the details and they're sending it to us being in the industry to keep us in the loop of what is taking place, as the world turns. So one of the subscriptions that I actually subscribe to, and it gives me content to actually provide to my listeners on a weekly basis, is Mortgage Market Guide, also known as Vantage Productions. And they send me out an article once a week that I can utilize the information to include in the newsletters that I send out to all of you. It's very valuable information. It's inside information that we're getting. And the article that they sent me last week, I didn't actually end up getting that out in my newsletter. I had additional, other things that I wanted to talk about, but the information in the article was really great. And so I'm going to read that to you. It's not a long article, but I think it helps put some perspective that a lot of people wouldn't have thought. And then we're going to talk about what they're saying in the article and what could happen on either side of the spectrum. So here we go. We're going to start with the article, and then we're going to talk about whether they increase the rates, what they say, whether they increase the rate even more, or whether they don't increase the rate as much. And then what does all of that mean? So Cindy did jump on. She says, can't wait to hear your advice. Hi, everyone. So Cindy says hi. And remember, you guys, I do want to say with that is that I am giving you guys education, information, the very best knowledge that I have that I can pass on along to you. I am not a financial advisor, so I don't want to call it advice, but I do want to help you and your family to achieve your next goal of homeownership, debt consolidation, home improvement, whatever it might be that you guys are going through, that mortgage and real estate are important to you. I want to make sure I get you guys off on the right foot. Rochelle Evans jumped on and she gave me a happy kissy face. So thank you so much, Rochelle. That's fantastic. Appreciate it. Thank you for letting me know that you're there. Sometimes it feels kind of lonely being over here in the studio by myself. And I wonder, do I actually even have people watching me? So thank you so much again for everybody that is watching. I love it when you guys are live and I love it when you guys ask questions. So here we go. We're going to jump into this article and it starts with the quiet before the storm. This past week, Fed officials were literally quiet with no speeches ahead of next week's Fed meeting, where 0.75% rate hike is widely expected. Let's discuss what will be an important week ahead. So this came out to me on Friday. So realize today is Monday. And again, we're expecting the announcement to be on Wednesday as far as whether they will raise the Federal Reserve prime rate. If they do raise it, how much will they raise it? So to give you the idea of what is the calm before the storm, today is the calm before the storm. So it goes on to say, for the first time in over 40 years, the Fed is expected to raise rates by at least 0.75% in back-to-back meetings. So that is correct. The last time that we had a Fed rate hike 6 weeks ago, they did raise us by 0.75 point. Now, this was actually not expected. We were expecting 0.5%. Back in 2021, when they started to announce that they were seeing inflation coming, that they were starting to meet, they were starting to talk about when were they going to raise the rate, how much were they going to raise the rate, they let everybody believe that they were going to do 0.5 point increments starting in 2022, and they were going to do that every 6 weeks throughout the year, even into 2023. As the meetings took place. And so instead what happened was the very first meeting, they went up 0.25, and then after that we hit 0.75. And now they're talking 0.75. I've even heard 1%. So they're jumping a little bit more aggressively than what we were anticipating. So let's keep going into this article. It's really great, but I just want to try to give you the background as we move through the article to help you understand a little bit better where we're at and how things change. So my opinion today might be totally different tomorrow. So keep that in mind as well. I'm doing the very best that I can do to guess what I think is coming based on previous knowledge, based on current knowledge, and things that I'm reading and understanding. So here we go. We're going to keep going. So it says this rate hike will have no impact on home loan rates, but it will increase short-term rates like credit cards, auto loans, and home equity lines of credit. Consumers should also expect a boost to the interest rate in your savings accounts. So one thing that has taken an absolute toll is savings accounts. How much interest are you earning on the money that you keep in the bank, in your savings account? That went down drastically over the years as interest rates on mortgages have really continued to go down to very low levels, lowest we've ever seen in history. And those savings accounts have actually also been lowest return on your money in history. So with the inflation, with the interest rates going up, that is going to help boost your savings accounts with the interest that you earn by just a little bit. Now, let me tell you, I don't expect that to be anything that's of any significance. I don't think you're going to make a super huge dollar amount back on your money that you keep in your savings account. I do still think that you want to be looking into other places to grow your assets, but that is one thing that will get a correction as inflation goes up and as interest rates go up. Now, what I thought was very interesting about this paragraph was when they said this rate hike will have no direct impact on home loan rates. And so I do want to talk to you about that. The reason that they're saying that is because everybody has expected, just like I mentioned that in 2021, they told us that in 2022 that they were going to start to increase the interest rates and they were going to do it by 0.5%. They were going to do it every 6 weeks at the Fed meetings that we had, and they were going to bring this all the way through 2023. So we have already anticipated that there is going to be a spike to the rate this coming Wednesday when they make their announcement. All of the mortgage lenders, all of the loans, all of the mortgage-backed securities, all of the investors in the bonds, they have all already anticipated that we are going to see that hike. So what has already taken place is the aggressive behavior of trying to get ahead of the curve with increasing the interest rate on the mortgage loans, on the rate sheets that we have been, quoting to you guys. And they're already building in that anticipation. So if for some reason they don't increase the Federal Reserve rate this Wednesday, well, we may actually see interest rates get a little bit better. Now, what they have expected and anticipated is that 0.75% rate hike. They did not expect a 1%, and they're not expecting a 0.5%. And so that's why when we started the show, I said, we're going to talk about what is coming. What have they said? What do people think? And at the end of the day, this is all our best guess, but it's better to be educated about it. And when it happens, understand why, than to not have any clue what is going on. Why did this change and what is happening? And I just don't get it. This is giving you that education and understanding to be able to, translate what everybody is talking about out there in the world. So that is one thing to keep in mind. Mortgage rates have already built in the anticipation. Now, this is an article, right? And I do agree with the article. I truly do. But I don't have a crystal ball, and neither does the person that wrote this article. So could there be a chance that interest rates do go up when they make that announcement on Wednesday? Absolutely. But the general consensus is if they say that they're raising the rate by 0.75 points, this has already been anticipated and it's already been worked into the rate sheets that we have today. So that's good news. Somebody that's out there that's pre-approved, that's looking to buy a home right now, and they're, trying to get their foot in the door. They've already heard monthly payments that they can afford. They like what they hear. They can probably rest easy that it's not going to be something that's going to jump overnight like what we've been seeing the rest of, earlier in this year. So that is actually good news as far as that goes. Now, again, if they come out and they say, well, it could be a 1 point increase or it could be a 0.5 point increase, then tables can change and we could see a difference in the rate sheets at that point. But assuming what everyone is expecting, and now I've actually heard that 1% is what is expected. So if we've already put in 3/4 into the anticipation and into the current interest rates, and they actually raise them by 1 point rather than 3/4, we would actually probably see those interest rates go up a bit. So keep that in mind. Stopping there, and we're going to get back to that same paragraph that talked about short-term things like credit cards, home equity lines of credit, and your monthly payments going up. We're going to hit that in just a sec. But I do want to jump in and say that Heidi is asking me a question. So what do you think will happen if they increase them by 1% this week? And so I actually just answered that question before I read her comment. So I hope that you did hear that. I think that we've built in about 3/4 of a point already into the rate sheets that we see. I think that if they actually increase the rates by 1%, that's an additional 1/4 point that nobody did anticipate. And I do think that we will probably see interest rates go up a little bit higher if that should happen. Now, again, this is my best guess, right? Don't have that crystal ball, but that would be my guess for you, is that if we see it go higher than what they're expecting, then I think that we'll see the interest rates increase on those rate sheets. Manuel gets on. He says, let's go mortgage mamacito. Manuel, thank you so much. That is awesome. I love that. Please keep commenting, guys. It really makes me feel good to know that you're there, that you're watching, and you're asking questions. And so just a really cute comment like that. Thank you so much, Manuel. Please, if you have any questions, please put them into the feed. I would love to answer them for you. It's interactive, guys. Get them coming. Keep them coming to me. And then Heidi did say, yes, I did. Thank you. So she did hear my answer. And again, I want you guys to all keep asking the questions. So if I go back to that paragraph, in that paragraph, it said, this rate hike, which we just talked about, will have no direct impact on home loan rates, but it will increase short-term rates like credit cards, auto loans, and home equity lines of credit. So I do want to make sure that you guys all hear that loud and clear. We have a lot of people right now that are looking to take money out of their home. They're wanting to do home improvement. They're wanting to buy land and then build a home that they can later sell their house and retire in. We've got a lot of people that are looking to buy out a co-owner for one reason or another. They bought it together, maybe pre-pandemic. They've got a bunch of equity in it. One person wants to stay, one person wants to get out. Reasons like divorce, when you've got to buy somebody out of the property to stay in it. There's a lot of reasons why you might want cash out right now. And there are a lot of people that are moving to the direction of a home equity line of credit. We do offer them. I can write them for you. It is something that we would provide if you want that, if you're interested. But I do want to warn that home equity lines of credit are adjustable and they are directly tied to the Federal Reserve prime rate. So as that prime rate continues to move up, the interest rate on your line of credit will also move up. So if you have an interest rate of 5% or 6% today, after they've already made quite a few rate hikes this year, and now it goes up another 3/4 of a point, or it goes up another 1 full point, now you might be at 6% or 7%, and you're going to continue to see that go as they continue to raise the rates to try to cut or break this inflation. So you really may be in a better position to take a long-term loan for the cash out that you require, and truly based on how much cash out do you need. So I did a show last week on Wednesday, and you guys can go back to my channel on YouTube. You can see it. And I talked all about home equity lines, home equity loans, and cash out refinances, the good, the bad, and the ugly. So if you're in that position right now that you've been thinking about getting some money out of your home or trying to tap into the equity that you have for another situation that you, like I said, you might want to buy land and you might want to build a home. If you have something that you're wanting to utilize those funds for, that's a great show. Go back, watch it. It was on my channel on YouTube on Wednesday. We actually premiered that video. So go ahead and watch it. It would be a good one for you. But do keep in mind that credit cards, home equity lines are directly connected to the Federal Reserve prime rate. Now, mortgage rates are long-term rates. So again, we've built in anticipation. We're expecting that they're going to increase that. We've already made adjustments to those rate sheets. Things like car loans are actually short-term loans. You're talking about a 5-year loan, 6-year loan. You're not talking about 30 years, 15, 20, 30-year mortgages. So those are also, you're going to see those interest rates also go up when they make that announcement, if that is the decision made by the Fed, is to raise that rate. So do keep that in mind. If you've got home equity lines, definitely you might want to be considering possibility of a longer term loan, maybe refinancing and blending your current first mortgage with what you owe on the equity line to get yourself locked into a nice long interest rate for the long term. I know many of you believe that interest rates are high right now, and you wouldn't want to take an interest rate based on today. And just like I said at the beginning of this show, coulda, shoulda, woulda, I guarantee that if you wait till next year, you're going to be in a worse situation if you've been trying to tap into equity and trying to get money out and hoping interest rates will come down. And we're going to talk about why that is. But let's continue to get through this article so that I can bring you guys up to speed and have you all educated and understanding what is happening right now in our environment, in mortgage, real estate, and the economy. So Heidi did ask me another question. She said, do you believe the rates will continue to increase at these rates? I think she means like as fast through 2023. I think that that's what she means. Like, do we think that they're going to continue to raise them in the same intervals all the way through the year of 23? And, that's a great question. I'd like to say no, to be honest with you. Again, big crystal ball, right? And giving you my best education and my best guess. I really believe that they are going to hit us probably another couple of times, possibly maybe into the first quarter of next year, 23. But I think that they are going to literally throw us into a massive recession if they do any more than that. So I would hope and I would expect that there is a ceiling that these guys are going to stop at to try to make sure that they can get us all back in forward motion. And I don't think we're going to see it all the way through 2023. But again, this is my opinion as the mortgage mom. I think that we're going to see a couple of more hikes, maybe through first quarter of 23. And then I think that we're going to start to see things stabilize. Now, I don't think that we're going to start to see things drop. I can tell you that right now. And that's part of my coulda, shoulda, woulda. What I was trying to say is if you need money right now, if you want to buy a home right now is the time because the interest rates are going to be better today than they will be in 23. I think that with anything, with any recovery of any kind, even if you think about a medical recovery, you had surgery or you tore your ACL or you got your, shoulder done. I think that with any kind of a recovery, including financially, for us to get past inflation, for us to recover from deficit and from, debt on the economy, I think that they're going to have to raise those rates to the level that they feel that we can all tolerate. They're going to push us as far as they can. They are literally going to take all of us to the brink of can't even barely make it anymore, but they're going to keep us in a position where we're functioning. And then they are going to try to make back as much as they can. And that's not going to be overnight and it's not going to be fast. So I do think interest rates in 23 are going to be higher than they are this year in 22. I don't think that they're going to continue to raise the rate. That's just my opinion. But I do think that those rates will stay and they will stabilize and that will become the very new normal. And if I had to guess as the mortgage mom, I think by the end of next year, we're going to see probably rates about 7.5% on a standard 30-year fix, which is actually a very standard mortgage loan, very standard interest rate that we've seen over, the last 30 years or so. Mikey, I'm going to ask you to actually scroll the comments back down because they're coming in pretty quick right now, which is fantastic. I was going to take a break, but I'm not going to because I want to make sure we stay on this subject. I'm reading the questions and I'm answering them for you guys. Remember, if you want to be part of the show, you want to do this live with us, you've got to text the word mom to 844-935-3634. That's 844 We Lend for You, WELEND and the number 4. You want to talk about a home equity line, you want to talk about a home equity loan, you want to talk about cashing out your property, you want to talk about a purchase, getting yourself in the door, all you've got to do is call that same number. That is what we do here. We do mortgages. We're doing them for a living, and this is how we make our way through life. It's how we pay for this show that you guys get your free education from. So it's 844-935-3634. Same telephone number that you would text mom to opt in for your once a week link to do the show with me live is the same number that you would call to get the office. Go to the website, mortgagemomradio.com, and you can click on the contact us button if you'd like to reach out in that direction instead. So going back to the questions, I answered Heidi's question. Heather jumps in. She's got a question and she said, do you think it is smart for a buyer to ask for the seller to pay some of the buyer's closing costs to help the buyer buy the rate down? And yes, I do. I think that we are in an environment right now where the homes are starting to sit on the market a little bit longer. I saw today there was an article that said that the average time of a house on the market currently is at 17 days. That's kind of an average across the nation. 17 days, guys, is still really, really short. During my time in real estate, selling before I actually got into loans, I can tell you that a normal market is a home would sit on the market listed on the MLS for about 90 days before it would sell. So the fact that we're at 17 days right now is still pretty fast. The fact that a seller is putting a home on the market and within less than a day, they have 30 showings, 15 contracts written, sight unseen, and they get to stipulate all of the information in that contract is gone, guys. This is a buyer's market, which is fantastic. You get to go in now and you get to ask for your appraisal contingency. You might ask to get some of your closing costs paid for. You might ask for the seller to buy your rate down for the first initial year or two. There are lots of options out there now, buyers, that you guys can jump in still while rates are great. We're still under 6. You could buy that rate down for the first couple of years if you wanted to. 4 or 5. Lots of opportunity right now to still get in and grab some great, fantastic deals. And now the seller's going to have to give you some appraisal contingencies, give you some time on your loan contingency, and maybe even throw in a couple bucks to help you get closed. So this is a fantastic market. And yes, Heather, that was a great question. I do think people should start asking for those things. Next question I get is from Double J. He says, or she, I'm not sure, it looks like it's a business. Do you think if rates go higher, housing prices will go down? So I do think that as the interest rates have been going up, it has definitely slowed down buyer activity. With less buyer activity, homes sit on the market longer. It takes longer to get an offer accepted. There might be more homes come to market. So in your same general neighborhood, there might be, 4 listings instead of 1 or 2. So there's going to be a little bit more competition. And with competition, that's going to drive down prices. So what I do think is that we're going to see a lot of stabilization. I don't think that we're going to see a lot of properties appreciation. I think that's going to definitely slow down. And I think that if we do see some price drop, which we very well may, I think that we would be seeing maybe a 10 to 15% price correction. And I don't think that's going to be in 2022. I think we wouldn't see that kind of change or price correction hit its absolute bottom floor. Again, these are all my guesses as the mortgage mom, but I would guess probably about first quarter 24. So not 23, but 24. So where are interest rates going to be at in 24? We don't know, but are they probably going to be higher than they are today? Yes. Again, last week I did my episode on if you wait to buy, what happens, right? Like, where are you at? What if property values drop by 10%? What does that do to your monthly payment? So that was actually my show last week on Monday. So go back and watch that show on YouTube. I do a whole show about that. I go through numbers. But in essence, if interest rates today are 5.5, just as an example, I'm not quoting you a rate. I'm just giving you an example. It's about average of what we're seeing right now. If interest rates today are 5.5, and by the time you go to buy a home in 23, 24, interest rates are at 7.5%, even if property values drop by 10%, okay, you're buying the house for 10% less than where they are today, your monthly payment is still higher than what it would be if you bought a home today. So then think about if a seller could help buy your rate down even further, get some closing costs paid. Essentially, again, coulda, shoulda, woulda. Right now is the time, guys. If you haven't been pre-approved, get pre-approved if that's been your goal. If you're sitting on hold right now, wanting to watch and see and wait to what happened, don't put yourself in that position. It's not the time. If you're thinking about pulling equity or money out of your home, now is the time. And we're going to get into that here shortly. But again, I want to keep moving through all of the questions. And once again, if you guys want to talk to us, call my office. It's 844-935-3634. That's 844 We Lend For You. WELEND and the number 4. If you text the word mom to that same number, guys, I don't actually respond to that text message. That's just to opt you in to make sure that you do get a text message when I do go live once a week. So we are going to go down to, let's see. My dad jumped in. He said, I was going to ask that. And then Rochelle says, thank you, hashtag HELOC. So you're very welcome, Rochelle. Thank you so much again. Okay, so Dad says, if the rate would come down after stabilizing. So again, that's a crystal ball that's so far out. Who in the heck knows? I would love to say yes. I think it would be fantastic if they would, and they did. I mean, obviously that creates more business for me. The more people that buy a home at 7.5 and then rates drop to 6.5, the more opportunity that I have to refinance that person. So, will that happen? I don't know. It's so hard to see that far out in advance. I do know that they need to get to a certain level. They need to stabilize so that we can recover. And then obviously what happens from there, who knows? Question marks, right? But we would hope that maybe they would come down a bit. Yes, that would be the hope. But how long until that comes to play? Who knows? Big question mark on that one. Let's see. So Heidi says, do you think buyers today still need to waive appraisal and loan contingencies to get their offers accepted? And Heidi, actually, you are so on it. Oh my goodness. We're thinking the same. I just answered that one. That is a no. Absolutely do not waive those in this environment. Keep them, guys. Keep them. And if the seller doesn't want to take them, there's another seller that understands the market that knows that they need to negotiate a bit right now to get their property sold. So definitely don't give those away. Carrie says, hi, I think buying a house now will be better than paying rent next year. Carrie, amazing. I'm so happy that you bring that up, and that is absolutely the case. Rents right now are increasing tenfold, and that was the show last week on Monday. So again, if you guys are wanting to go back right here on the YouTube channel, you can see the show that I did last Monday that was geared towards home buyers. Should you buy? Should you wait? What's happening with rents? Rents are increasing. They're increasing actually very quickly. Right now, California is allowing the landlords to increase rents by 10%, which was typically 5% before, capped at 5% per year. They're now allowing 10% because there were so many years through the pandemic that they couldn't actually evict. They couldn't increase rent. They really, the landlords had their hands tied. And so you're starting to see rents really explode. They're exploding as well because of inflation. So if you think about a renter or a landlord that needs to replace appliances for the next tenant, appliances are more expensive, carpet is more expensive, paint is more expensive. But again, I go really into detail on that subject on my show last Monday. So check that out. Go back and watch that show. It's really good stuff, and it does answer a lot of those questions. But rents are ugly, and they're going to get even uglier, guys. So again, why would you not buy a home and lock in a current rate? Current monthly payment, get that security. That's really important. Let's see. Manuel says, are there any zero down programs for educators? So there are plenty of down payment assistance programs that can help you get in with zero down on a loan. Those down payment assistance programs do change by county, state, city. So that is something that if you're interested in getting into a home with zero down, it is an opportunity. Down payment assistance can be a grant. It can be a loan. It depends on you, your interest or your credit score. It depends on your income. There's lots of things that go into which down payment assistance programs that you truly qualify for. You personally, every person qualifies for something a little bit different, and it depends on the county, city, state that you are in and what kind of opportunities and programs that they have. But yes, they do exist. So again, if you have any questions at all, these are the things that we do every day, guys. We are, at the end of the day, I'm bringing you free education and a free show every single week to get the information out there. But at the end of the day, we're doing loans. Me and my team, we're doing loans. We want to be here. We want to help you. We want to get you through whatever it is that you are looking to do. So call the office. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So I actually missed one question. I jumped to Manuel, but I missed Double J. It says, if housing prices keep going up, do you think rent prices will too? So that was a fantastic question. And the answer to that is yes. Obviously, as home prices go up, it costs more money to buy them, costs more money for that landlord to have obtained the property. Interest rates keep going up. Now that landlord's higher price home and higher priced interest rate makes the monthly payment for them to carry the property more expensive. So, hey, guess what, tenants? Renters, you guys get to pay the price for that landlord to hold that property, own something tangible, and have something to secure for their financial future, which that real estate piece, that piece of real estate that you're living in, is part of their future retirement. So again, why would you do that for somebody else when you could do it for yourself? If you guys haven't bought a home, if you've been thinking that you should wait, you think house prices are coming down, you think interest rates are coming down, I've got news for you. That's not the truth, but right now is a great time to buy. Interest rates are still low. Sellers are starting to negotiate, and where you're going to be at this time next year is a far better situation. All right. So Heather asks, if I want to ask a seller to help with closing costs, how much should I need to ask for? So it depends on how much that you want to go towards your closing costs from the seller. Closing costs on average, every state, city, and county is a little bit different with their fees. So keep that in mind. This show goes across the nation. You guys are watching on YouTube. Anybody can watch the show, from California to New York. So it is going to be a little bit different by state, county, and city, but usually on average, closing costs run about 1.5% to 2% of your sales price. So if you needed a down payment, let's say was 5%, and you have 5% of your own money, but you don't have 2% for the closing costs, that is something that you could go in and negotiate and ask a seller to pay. So what's the harm? Ask for it. Ask for it. What's the worst thing that they can say? No? Ask for it. And if you have a real estate agent that won't ask for it, get a different one. If you guys need a referral to a really great real estate agent, love to give you one. We've got them all over the place. We're working with just amazing women and men that we've been dealing with for years, that have been in the industry for a very long time. And trust me, they know how to negotiate. So if your agent tells you no, they won't do that for you. They won't write it. Right now is not the market. They can't get that. You got to go overprice. Give us a call. Let's help you get into a better real estate agent. So let's see. I've got Heather asked her questions. Okay. If I ask the seller to pay my closing costs, can I still use a down payment assistance program, or do I have to pay the costs myself? Yes, you can use a down payment assistance program for the down payment. And yes, the seller can pay the closing costs. So ultimately, you could get into that home with literally zero down payment. So I hope that everybody out there that's been thinking that there's just absolutely no way that they can buy a home realizes that if they've got good credit, they've got good employment, they've got good debt ratios, they just don't have a savings plan, that it would be a really good time to pick up the phone and call us and talk to us about you, your scenario and situation. And let's figure out if you really are at a point where you do need to wait, or could you actually be jumping in and buying something right now? So I sure hope that if you're out there and you've thought real estate is my goal, I really want to buy a home, that you're not putting it on hold because you think you need 20% money down, or you think that you need a certain credit score, or you think that you need a certain job. You don't know what you need until you talk with the experts. And when you do, that's the whole point of the phone conversation is, it's a consultation. What are you doing? Who are you? What is your credit score? Where do you work? What did you do before you started there? How are you paid? What do you have available for a down payment? Do you understand closing costs? We're going to have that conversation with you to make sure that you are ready to go, or if you are not ready to go, give you the game plan, knowing what you need to achieve in order to complete the goal. If you don't have a goal and you don't have a game plan to achieve the goal, you never will. So I really do want anybody and everybody that's been thinking about, I need cash out of my house, I want to buy a home, I have an equity line of credit I'd like to consolidate, I want to buy out this co-owner, I'm in the middle of a divorce, I need to do something. I want you guys to pick up the phone and find out. Most of the time, and many times, we're our own worst enemies. We don't think that we are worthy of being able to get the financing, so we stop ourselves and we don't even make the call. Let us help you determine if, number one, you can do something right now today, or number two, how do we get you there if you can't? And if you don't know how to get there, you'll never get there. So it is really important. I want you guys to pick up the phone if you've been thinking about doing any financing at all and talk to us. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. If you're enjoying the show, you wish that you would be able to watch it live, you wish you were part of the action, you wish you were asking questions while I was doing the recording, then you've got to text that same telephone number, text the word mom. It will opt you in and you will get one text message a week with a link to the show that you can click on and you can jump on and you can be part of and you can interact and you can ask your questions. So make sure that you guys text mom. You can also subscribe to my channel. That is an option. So if you're on YouTube and you're watching right now, please give me a thumbs up. I hope you're enjoying the information and the show, but also subscribe and click that notification bell and turn it to all so that you do get a notification every time I go live. Sometimes I do it Monday, sometimes I do it Wednesday, and sometimes I do it twice a week. So I am only going to text you once, but if you don't want to miss a single episode, you guys need to subscribe. So hold on tight. I do need to grab a glass of water. I feel like I've been nonstop for about 30 minutes or so. It looks like Janice has a question for me. There's a Jason waiting with a question. So don't go anywhere. Super quick break. We'll be right back.
She's the mortgage mom.
Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. I'm here to talk to you all about our next upcoming homebuyer workshop. It's going to be on Sunday, August the 14th at 1 p.m. This is so awesome and it is going to be so much fun. We are going to be serving wine, beer, appetizers, hors d'oeuvres, coffee, tea, whatever it is that you like to drink, but we want it to be a nice, relaxing afternoon. Lots of fun. We're going to be playing games. We're going to have giveaways. We want to make this an interactive experience. You may even walk away with a free appraisal for your transaction, but it is a homebuyer workshop where we are going to teach you everything that you need to know about buying a home, beginning from the start at A, what do these words mean, to all the way to the end. I'm in escrow, what do I do now? And signing that final closing disclosure. We want to make sure that it is a fantastic day with lots of information. We are going to keep that crowd small. We have 30 total seats and we've already got some of those tickets sold. So if you'd like to come, please don't hesitate. Text the word RSVP to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Text RSVP. You will get the link to go ahead and check out our Eventbrite, get your tickets, and we cannot wait to see you. That's Sunday, August the 14th at 1 p.m. Pacific time. We'll see y'all there.
Pick up the phone and call mom.
Screen Mikey. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux, and today we're talking the Fed. We're talking about the announcement coming Wednesday. What does that mean to you? This is a live interactive show. It's actually sparked a lot of questions today. These are my favorite shows when people ask me questions because I get to answer them, and the chances are that there are so many people that had the same question, wondering the same thing, that not only am I helping you and getting you your answer immediately, but I'm helping everybody else as well that maybe had the question, but they were just a little bit too shy to reach out. So remember, the show is interactive. We want you to be part of it. We want you to participate. Subscribe to that YouTube channel or text mom to our phone number and, make sure that you guys are on the list to know when we go live. So right before the break, I said that we had a question from Janice. It says, does the buyer have a choice to have an impound account where property tax and home insurance are paid through the bank/escrow? So that's actually a great question. And the answer is yes and no. So if you have less than 10% down payment, the bank is going to require that you do have an escrow impound account, where if you have more than 10% down, you will not be required. So it depends on the amount of your down payment, but it also depends on your loan program. So a conventional loan with 10% down does not require an impound account, and you can choose to pay property taxes and insurance all on your own. However, if you get a loan like a VA loan, or you get an FHA loan. So if you get a government loan, you will be required to have taxes and insurance in your monthly payment, impounded or escrowed, no matter how much money that you put down. So it really depends on your loan program, and your down payment will determine if it is a requirement. But the answer, like I said, is yes and no, just depends on what kind of loan you take. So the next question was, Jason jumped on. He says, is it worth it? Is it worth points to lower your interest rate? So I think what he's asking, is it worth paying points to lower the interest rate? And as I've said on many, many shows in the past, and I'll say it again, the math doesn't lie. So the amount of points that you pay, whether you should pay points, is determined by the math. So we would go through that with you together based on the loan program that you're selecting and what the interest rates and the rate sheet that day look like. So sometimes it does make sense to pay the points. There's going to be a significant, huge difference in the amount of savings that you would have over the long term of the loan. Sometimes there's a very quick recovery to get those points back. Points on a purchase are recouped much, much faster than points on a refinance. So we would go through those numbers together to determine where that sweet spot is. I could tell you that many times paying points, yes, does come out ahead. But it also depends on what your goals are for the loan that you're taking, not the property that you're taking, for the loan that you're taking. So if you plan to be in that loan for a year, 3 years, 5 years, 7 years, would depend on how many points that you can pay and still recoup, and recoup faster than the amount of time you'd be in the home to see that savings, right? So we're going to make sure that we go through that with you. We show you those opportunities. But hey, I'll tell you, if you're a buyer and you can get the seller to pay some closing costs and to pay some points and to bring your interest rate down for you, why the heck not? That is free money, giving you a lower interest rate from the beginning of your mortgage to the end of your mortgage. So definitely something worth trying to negotiate and get back. Heather jumped on. She says, you always give such great information. Thank you. You are very welcome, Heather. You always give great information as well when you're on the show. And I love the questions today. They've been fantastic. And then YouTube jumped on and gave me a big X. So I'm not sure who that is. I'm guessing it kind of looks like it might be a little spam person commenting in the show, but that's okay. Again, this is an interactive show and I want you guys to ask questions, and I'm going to read every question that comes on my feed and I'm going to answer that question, and you get to see me do it live. This sound goes to radio on Saturdays and Sundays. And again, my radio listeners, I love you guys all across the nation. I love that you listen. I hope I'm giving you valuable information. But just remember that if you're not doing it with me live during the week, that you are a week or two behind in the information. So sometimes you might feel like, oh, well, you know, the federal rate hike happened last week. Why is she talking about that now? That's because we have to edit the show. So if you want to see me do it live, you want to ask me questions, and you want to try to stump me, the way to do it is to do it during the show while I'm live on YouTube and I'm actually recording it. So you're going to text the word mom to 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. Text the word mom. You'll opt yourself in. You'll get a link once a week. You can jump right on YouTube and interact with us live and do the show with us. You can also call that telephone number and get any of the girls here at the office on the phone, talking to them about anything that we have discussed in today's episode. They're answering Saturday, they are answering Sunday, and obviously Monday through Friday. And when we are not available, if the phones are busy, the receptionist's on the phone, I'm on the phone, somebody can't grab that line, it does go to call service. You are more than welcome to leave a message or schedule an appointment for a call back. So we are trying to make sure that we are accommodating everybody. And when you call, you are actually talking with me and my team directly. You are not calling some other mortgage company that I'm marketing for. It is my team, and we're doing the business, and we're actually holding your hand and getting you through the process. So I hope that feels good for you. So with that, I'm going to end the show by finishing this article because I want to make sure I finish it. We got through the first 3 paragraphs and we had so many questions and so much information that we didn't actually get to complete the article. So I want to finish it, and I want to leave you guys all thinking question marks, what's going to happen Wednesday? Or if you're listening to the show on radio and it already happened, but you don't know what the outcome was, now I want you to go back and I want you to see what they said. And I want you to see if what we talked about actually happened. So this is cool for anybody listening today and anybody listening in a week from now. So here we go. Okay, so it started with this rate hike will have no direct impact on home loan rates, but it will increase short-term rates like credit cards, auto loans, and home equity lines of credit. Consumers should also expect a boost in the interest rate in your savings account. So we talked about all that. How will mortgage rates react? That is the unknown at the moment. Back in June, when the Fed also raised rates by 0.75%, the 10-year note yield hit 3.49%, the highest levels in years. So they're not talking about mortgage rates hit 3.5%. We all know they're way higher than that. We're talking about a yield that basically the mortgage rates are tied to, okay? The highest levels in years, and moved sharply lower on increased recession fears. So we actually saw interest rates come down a little bit the last time that they increased the rate, and then we saw them spike quite a bit. Today, the 10-year note stands near 3%. If the economy can absorb higher long-term rates, then we should expect long-term rates to move higher. Currently, the 2-year note yield is near 3.25% and inverted with the 10-year, which typically portends a recession. In a recession, long-term rates do not go higher, and the Fed doesn't raise rates. Or doesn't hike rates. So again, that's kind of what I was talking about. Like, I think they're going to push us to our absolute limit, and then they're going to leave us there to try to recoup. Okay, that's at least that's my opinion. The Fed, who controls short-term rates, so we're not short-term rates, mortgage is not short-term, but your car loans, your equity lines, and your credit cards are, is hiking the Fed funds rate to slow demand, tamp down inflation, cool off the labor market, and remove froth from the housing market. So once again, where I said, pretty sure we're going to see appreciation slow down. We may even over the next year and a half, see property values come down 10, 15%. To me, that's the froth that they're talking about. But where interest rates will be when we get to that point, probably quite a bit higher than where they are today. This actually goes a little bit further, but nothing that I think is really super important for today's show. But it was really great information. I thought it was super important to have this show prior to that meeting on Wednesday. It's going to be very interesting to see what they do, and then how do the mortgage rates react, right? I'm waiting for it. I hope that you guys are too. So to finish the show, Janice had one more question, and I'm going to leave it at that because we're going to run out of time. When we get the invite to the August 14th event, will it give me an option to register being remotely? So yes, if you'd like to come to the Homebuyer Workshop, you need to go ahead and go online, register for your ticket. And then if you would like to be remote versus coming in person, which we love virtual, that's fine. Just make sure that you send an email and it is on your ticket confirmation, where to send the email to, and we will make sure that you get a link. We do the link. The virtual class will be via YouTube, just like the show. However, it is a private link, so only those people that have registered and gotten a ticket will be able to actually access the Homebuyer Workshop that day. So great question, Janice. Thank you so much for bringing that to my attention. I didn't realize that was a question mark out there, but yes, you need to text RSVP to 844-935-3634. Same phone number that you text mom, same phone number that you call my office, but RSVP will get you the information to the next workshop. So with that, okay, so number one, everybody that is on right now on YouTube, don't go anywhere. We are going to go overtime because I want to get all of these questions answered. It's very important to me to do so. For all of you guys that are listening by radio on Saturday and Sunday and a couple of weeks behind, I love you. Thank you so much for listening. Please call my office with any questions that you have. Really wanted to get to the coulda, shoulda, woulda on the refis, the interest rates, the cash outs, all that stuff. But if you've been thinking about that, now's a great time to call the office. So I hope you guys have a fantastic weekend, and next week we will then get back into that to make sure that I keep going on the same subjects and the same topics. So with that, thank you so much. I will talk to you all real soon. Okay, so for all of you here on YouTube, we're going to keep going because I don't want to rush through, but I do have to finish the show at the 57 minutes to get the 1 hour done and to get the show up on radio. So as you can see, I do actually record this live. All of my sound goes to radio. I don't have anybody here saying, hey, stop, edit, cut. I do have a sound producer who will go through and will clean up a couple of the hums and yas and, maybe stutters that I do. But for the most part, what you guys see right here, you're getting it firsthand, and then radio is getting it a couple of weeks later. So to go back to Janice's really quick on the workshop. And then Jason also asked, how often are the classes? So number one, you guys get your tickets. You need your ticket to get your private link to do it with us on YouTube. If you're doing it with us, the only thing that you are missing out on is some wine, cheese, crackers, just kind of hors d'oeuvre event and sitting in class. That's it. Other than that, you're getting everything virtually that anybody else here in the actual office is getting, or in the workspace. You're getting the opportunity to play the games with us. You're getting the opportunity to win gift cards and free appraisals and, all of that fun stuff. We really do try to make it a very fun event. I want you guys to learn. I want you to get everything that you need out of it. And many of you are listening across the nation. You're not here in California. You're not here in Los Angeles. And so it is difficult for you to make it to our actual workspace to do the workshop with us. So I'd love to have you guys on virtually. Just text RSVP to our phone number, to the 844-935-3634, and you can sign up and get that ticket. Now, Jason asked me, how often do I do these? So we're doing them. We just started again. I used to do them a lot from 2016 to 2019. We would do them about every 6 to 8 weeks. And that's kind of the track that we've started again. Obviously, through the pandemic, we couldn't really do them live. People didn't really want to come in person. I don't blame you. So we did a bunch of workshops that were, on YouTube. And a lot of that information is irrelevant at this point because it's been, a couple of years now since I've actually completed one of the workshops. We're going to do them about every 6 to 8 weeks. So I don't have another date for the next one yet. This one, we just did one back in June, doing it again August the 14th. And then the next one is going to probably be sometime into October. Then I'm going to be honest with you, nobody wants to come see me during the holidays, during Thanksgiving, during Christmas or, Hanukkah. Nobody wants to come during that time. I don't blame them. I don't want to be here during that time. So we'll probably do one more October-ish, maybe middle October, maybe Halloween-ish. And then we probably won't have another one get started up again until probably mid to late January. So love to have you guys come on out, come in person if you can. And if you can't, you guys get the tickets and do it virtually with us because you're not losing anything except for, a glass of wine or a glass of beer to just kind of sit in the classroom atmosphere and watch me do it right there in person. But virtual, you're interacting, you're watching me do it, you're part of the whole thing. So we'd love to have you guys in either way, whatever whatever is easiest for you to attend. So Samira got on. She says, hi there. Thank you so much, Samira, for watching. Appreciate it. She said, Costa. So I don't know what she meant by that, or if she's asking me if we're going to do a workshop in another area, not really sure. But I do want to let you know that we are doing these workshops here at our Mortgage Mom Radio event space. It's where where I'm, located doing the show, where I'm recording the YouTube here and the sound for the radio. We're not actually going out and traveling. There's a really big expense for me to do it that way. But my goal is to get you the education regardless. I don't want to charge you an arm and a leg. I don't want to be charging a couple $100s for somebody to come and see me in person because I drive to out to Orange County or out to the Inland Empire. I fly, to Washington and I stay up in Seattle, or, I'm somewhere in Oregon or, Tennessee or Texas. I would love to do that, but I would be charging you guys hundreds of dollars for the workshop. So for anybody that can make it to me that's within, an hour and a half drive of LA County, we'd love to have you. We'd love to have you come in and do it in person. But for anybody that wants the same education, the same information, the same opportunity to ask questions, and the same opportunity to win a couple of prizes, play some games, and have some fun, you guys can all do it virtually right from your computer screen at home. So again, just text RSVP to our number, to the 935-3634. We'd love to have everybody participate no matter where you're located. Heather jumped on. She says, Debbie, if you could only eat one food for the rest of your life, what would it be? Heather, I love your questions. If I had to pick one food for the rest of my life, I would say probably potato. Because I'm figuring I could do whatever I want with a potato, right? So I could make French fries, I can make chips, I can make dumplings. There's a lot of things that I can do with a potato. So I would probably go with potato. It would be my answer. There'll be a lot of questions like that during the workshop, which would be lots of fun. So make sure you guys join. I hope you all enjoyed the show. I hope I answered all of your questions. Next show that I do is going to be all about coulda, shoulda, woulda. And it's going to really be focused on interest rates, refinances this year, next year. How do payments change? Should you consolidate? Should you equity line it? Should you equity loan it? We're going to get into all of that. We're going to get into the skeptics that think that the world is turning over and property values are going to fall to pieces. We are going to handle the people that think that interest rates are going to drop within the next 12 months. That's going to be fun. So we're going to get a little bit debatable on the next show, and it should be a good time. So anyway, with that, I hope you guys all have an amazing rest of your week, and I look forward to doing this all with you guys again real soon. I'll talk to you later. Bye-bye.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.